Finishing grad school is a huge accomplishment, and it feels great to have gained new skills that can launch you further in your career. But on the flip side, figuring out how to pay for those years of study can be a real pain. And while student loans are always an option, finding the best lender to fit your unique circumstances can be tricky. Whether you're looking for options that can cover both tuition and living expenses, or subsidized loans and grace periods to ease the stress of repayment. So, in this video, I'm taking you through some of the best student loan options for grad school. We'll explore where you can get the most competitive rates and take a look at some of the options available through lenders like College Ave and Sallie Mae. Each of these services could be a big help in funding your educational goals, but as with all loans, there's plenty of pros and cons to keep in mind before signing your name and making the commitment. So be sure to watch till the end to get a better idea of which student loan option you should pick. Now let's get started. All right, so you really can't go wrong with the first option on the list, College Ave. It's an online portal that helps arrange loans for students. They set up the lending, but they're not the ones actually lending the money. They're more like a mediary and have a few different banks that they partner with. Now, one of the things I really like about them is their super easy pre-qualification process. You can do it right on their website without worrying about a hard credit check that could impact your credit score. So no stress. Then once you're pre-qualified, all the offers you're eligible for will show up right on the website, and you can take your time reviewing your options before moving forward with the formal application, which is the only part that affects your credit score. So if you fill in your information correctly, you'll quickly get a clear view of your options without risking your credit, which is a feature that not all lenders provide. And the College Ave website makes it incredibly easy to find useful information on scholarships and loan financing. They offer loans starting as low as $1,000 and going up to your entire tuition cost. Plus, if you already have student loan debt, they also offer refinancing options that could help you reduce your payments or pay off your debt faster. Now, College Ave is a private lender, meaning they can offer both fixed and variable rate loans. And if you don't know the difference, then a fixed rate gives you predictable and unchanging monthly payments. With College Ave, these start at 3.47%, but a variable rate changes based on market conditions, with College Ave starting at 4.44%. All right, so in order to qualify for a loan from College Ave, you have to be at least 16 years old, have a social security number, and be enrolled in an eligible school. For undergraduates and international students, you also need to have a cosigner, and it doesn't take more than 3 or 4 minutes to check if you qualify and see what rates you could get. So you'll be given a choice of loans for undergraduate, graduate, career, parent, or refinancing your existing student loan. Then you choose your loan term and your APR or interest rate. And once your loan is approved by College Ave, they check in with your school to confirm that you've enrolled or that you've been accepted. Then the loan that you're asking for doesn't cost more than their cost of attendance and that you meet the school's academic progress guidelines. Lastly, if everything checks out, College Ave will send the money directly to your school. Now, the benefit of being financed through College Ave is that along with having pretty flexible terms, they offer a number of ways you can save on how much you pay on the lifetime total of your loan, starting off with making minimum payments while you are still studying. If you're able to make minimum payments while you're still in school, it shows them that you take the responsibility of paying back your loan seriously, and they'll reward you by slightly lowering your interest terms. You also have the option of paying the interest charges each month while you're still in school, or you could pay a flat rate of $25 a month, but you could also opt for a deferred payment where you don't make any payments until after you finish school, but the trade-off here is that you'll end up paying more interest over the life of your loan. And as I mentioned, there's the flexibility to choose between fixed and variable rates. But the main reason I recommend College Ave is that their services are specifically aimed towards students and getting them the best possible deal. They also have lower than average starting rates compared to other lenders in the industry, but do keep in mind that their maximum rate is also much higher than average for student loans at 14.49% for both variable and fixed interest rates for graduates. But their loans are structured to help you pay off your student debt as fast as possible. So they encourage you to start paying while you're still studying, and those low starting rates are there to help you get out of debt faster. So if you like what you're hearing so far and want to get started with College Ave or Sallie Mae, which we'll cover in just a moment, you can go ahead and check out the affiliate links listed in the description below. It won't cost you anything extra, and you'll get a bit of a discount, which you wouldn't get if you went directly to their websites. All right, so jumping over to our next lender, Sallie Mae has a name that's very familiar to a lot of Americans. They're a private student loan provider that started out as a federal student loan lender back in the 1970s. And nowadays, they offer both undergraduate and graduate loans, as well as loans for trade schools. Plus, they even fund part-time and international students. Now, compared to College Ave, Sallie Mae has fewer options for repayment and even fewer choices for loan terms. And although they don't charge you any loan application fees, they don't have a pre-qualification process like College Ave does. So when you fill out their online application, it will actually reflect on your credit history. So my advice is that you do your best to check and see if you qualify before you go through the process, because you don't want it to affect your credit score negatively just to find out it isn't for you. But to apply, you'll need to give them some basic personal information and details about your school and the semesters you plan to have funded. You also need to know what your school's total cost of attendance is, which means all related expenses, including tuition, but also stuff like meals, equipment, and books, which is information you can get from your school's website. And just like College Ave and lots of other lenders, your loan can't be more than whatever your school has calculated as the cost of attendance. Now, if you have a scholarship or a cosigner, you'll need to supply that information as well. However, you don't necessarily need to have a cosigner, but most students who don't have a cosigner will need adequate credit history of their own in order to get a loan. Though in any case, even if you can get approved without one, having a cosigner can get you lower interest rates, so it is worth checking if a parent or other adult with a good credit history would be willing to cosign for you. All right, so once you've filled in all these details, Sallie Mae will give you a document called a loan application solicitation disclosure with a detailed breakdown of the rates, terms, and repayment plans that apply to you. Then if it works for you and you decide to go ahead, Sallie Mae works directly with your school to disperse the funds. Now, when it comes to loan terms or how long you have to pay the loan back, Sallie Mae doesn't have as many options as College Ave. They offer either 10 or 15 years for undergrad and career training loans, 15 years for MBA, law, and graduate school loans, or 20 years for medical or dental school loans. Their minimum loan amount is $1,000, and their maximum is 100% of your school certified expenses, with a standard late repayment fee of $25, which brings us to repayment plans, where you have three choices. You can pay interest or a set amount of $25 a month while you are still in school and during the 6-month grace period after you finish, or you can start paying after you finish studying and the grace period is up. But obviously, it's best to pay as much as you can while you are studying if you're able. That being said, the most important thing is the rate, and Sallie Mae offers a bunch of different options. So if you're looking at a law school loan for a fixed graduation rate, Sallie Mae starts at 3.49% and it goes all the way up to 15.49%. Now, when it comes to variable rates, Sallie Mae starts at 4.54%, while their maximum rate is 14.71%. So for the most part, Sallie Mae rates start a bit higher than College Ave's, with lower maximum. But to wrap things up, if you want to get the best student loans for graduate school, I definitely recommend going with either College Ave or Sallie Mae. As I mentioned, these rates vary slightly from lender to lender. However, College Ave does offer a faster application process and a great range of repayment options, including 4 payment choices compared to Sallie Mae's 3. But whether you value College Ave's quick and flexible options or prefer the variety of rates from Sallie Mae, both are reliable choices for financing your education as you work towards your academic goals. And ultimately, choosing between these two lenders really depends on your repayment strategy and personal finances. And that's all for this review. I hope you found this video helpful, and if you did, then please be sure to give it a thumbs up and subscribe to see more just like this. As a reminder, if you do decide you want to get started with either of these lenders, then you can use the affiliate links down in the description at no extra cost to get a discount that you won't find on their websites. Now, as always, I enjoy hearing your thoughts, so go ahead and leave any questions or comments down below, and I'll try to get back to them as fast as I can. Finally, guys, thanks so much for watching, and I'll see you in the next one.